Hello and welcome everyone. My name is Alexis Rogers and I'm the Customer Relationship Lead here at RightCapital. And I want to welcome you to our webinar today on leveraging our new annuity models. And so in this webinar, we're going to be demonstrating how to leverage the customized annuity models to really enhance your workflows and create tailored proposals for your clients even after applying them. So we're of course going to be reviewing how to create and customize those annuity models and how to apply them seamlessly into a client plan, whether we're making a curated annuity purchase proposal or if it's an annuity product that most of your clients might already own already. We're going to walk through how to leverage it in both aspects. And especially if we're looking to propose an annuity purchase, there are a lot of key visuals that come along with presenting that information. So we're also going to highlight what that looks like in RightCapital. And we're also going to be covering the different resources that you do have available to you when using RightCapital. One of those resources being that during this webinar, if you have any questions, please feel free to use the questions drop down and type out your questions down there. More than happy to engage with any questions you might have. And so shifting gears into RightCapital, when we first log in, we're going to be brought to our advisor dashboard. And so in the advisor dashboard, to start to curate custom model portfolios for the annuity products, we're going to find those by clicking into the models section. Here under models, this is where we can create a standardized version of the annuity products. And we're going to apply these to client plans after we start to curate those templates for us. So under models, we're going to click into annuities. Here in the annuities section, this is where we can manage our existing ones if we already have some, but it's also where we can go to start to curate a new annuity model. To do so, we're going to click on the Add Annuity button. From there, we're going to add our new annuity. And the first thing that we're probably going to be doing is retitling this annuity product. And so let's say this is our fixed annuity product number 1. Hit the check mark to save the name change. And then to start to build out this particular model, we're going to select which type of annuity it is. So whether we are entering an existing annuity, anything along those lines, there are 4 main types of annuities that we can enter. So from the annuity dropdown, we have the option to indicate that this particular product is a variable annuity, it's a fixed annuity, an indexed annuity, or an indexed variable annuity. In this case, we're going to be looking at a fixed annuity in particular, and every single different annuity type has its own kind of corresponding fields for us to start to define this product a little bit further. For the fixed annuity, that's of course the crediting rate. But if we chose any of the other ones, there are other key pieces of information that we can enter here to set the baseline of what this product looks like. So in this case, the crediting rate is going to be 3.75. And then a key part of an annuity, of course, is the idea of what are we getting in terms of guaranteed income streams. That is when the distributions come into play. We can start to add distributions by clicking on the Add Distributions button. This will then open up a drawer in which we would probably be wanting to title this distribution name. And for different products, there might be different options or different key events or ages where we are going to be tapping into that income stream. So let's say in particular, this is looking at income at age 65. Just that way for our reference, when we're selecting this from our distribution options, we know exactly what this is referring to. For distribution types, there's 2 main formats to guaranteed income streams off an annuity product. The first one is a lifetime income, which is what we currently have selected, which means we have a guaranteed income rider and we have a benefit base that's applicable as well. The second option is annuitization. Annuitization means we're going to be fully surrendering the value of the product to tap into the income stream at the time that we are defining down below. So if we do have an annuitization event, we would indicate if it's single or joint. And we can also indicate if this is a certain period of time for the guaranteed income. So if we have maybe the idea of staggering income streams or staggering annuity products for maybe 5 years, for example, is oftentimes a popular strategy for annuities. We can model that with a certain only option, and then we'd indicate the guaranteed period or the year in which we would be stopping this income stream. And then we'd enter when the income starts, the income percentage off the product, and also if there's any annual increase. For type, there's also the option for certain or life. So if somebody passes away, it's a different event. And then there's, of course, life only. In this case, for this particular product, though, we are going to be modeling lifetime income. With the lifetime income option, like I said, this is a guaranteed income rider still, but there is going to be an applicable benefit base for this particular product. With the lifetime income, we're going to see a similar field here where we would indicate if this is single or joint. In this situation, we're going to be assuming it's joint. And we can also indicate a roll-up rate as well. With the roll-up rate, this is going to be applicable to the benefit base, which we're going to be indicating when we actually have the annuity product that we're going to enter in a couple minutes. But we can indicate what the roll-up rate looks like for this particular product. So let's say this is our product. We know exactly what the situation looks like or the typical parameters for this illustration is. We can indicate it's a 5% roll-up rate if it's typically a compounding roll-up rate. When the roll-up stop year is, when income starts. In this event, as we have an indicator for distribution name, it's clients age 65. So in the event where it's clients age 65, that particular income stream, and since it is joint, is going to be 5%. So we're going to leave that entered, and we're going to assume a customized increase. But we can assume that the income percentage is increasing either not at all, at a customized rate, or just general inflation for whatever you have indicated. In this situation, it's a 1% increase. And we can also indicate if there's any applicable account value based fees for this product, or if there's an applicable benefit based fee as well. So we're going to save this particular distribution option, and we're going to add our secondary distribution option because there's multiple for this particular product. And this is going to be income at age 67. Once again, lifetime income. This one is going to be joint as well. It's very important for this particular product. Income starts at client's age 67. And for this particular option, since we're delaying it a little bit, it's a 7% income stream with a customized increase still of 1. And then once again, we can enter that account value based fee or benefit based fee. And what's nice about this is if we are trying to model a situation where we are looking at maybe a annuitization for this product as well, you still can indicate that and have dynamic different options for the distribution streams. So let's say this is going to be a single income at age 65. Maybe that's another option we're looking to have for this annuity product that we know can be a common route that clients might be looking at evaluating. We can indicate that here. Once again, roll-up rate's fine. But clients age 65, and especially because this is a single income stream, this is going to be 7.5 with a customized increase of 1.5 as well. So now we have a little bit of a mock-up of this particular annuity model. If we are looking to, we can continue to build out new annuity models by clicking on Add Annuity Model. But let's say this is typically very similar to what we have for other products and we want to continue to build off of it. We do have the option from the downward arrow to choose to copy the current annuity models. So if we wanted to copy this one and then maybe make this into a variable annuity or a similar type product, we can do so and then just maybe manipulate the fields from here. Probably retitle this from annuity product number 1, but there is that way to nice and very easily and efficiently just copy an existing product to continue to build off of it. We also can reorder the flow of what we're looking at for annuity names if desired, or sort from this list by clicking on this button right here to have it be alphabetized. And then once we're ready, now that we've started to build out a mock-up of what we want to use for our annuity products today, we're now going to apply this to client plans. So if we go back to our clients list, we're going to search for our client for today, which is the Sherlock Holmes family plan. And there's 2 facets of how we can incorporate annuities into a client plan. The first way is entering it as part of the current plan or the current net worth. So if we have somebody that currently owns an annuity product, or going forward when we have an annuity product that we're entering for a new client, we can do that in the profile net worth section or in the blueprint net worth section as well. But in this situation, we're going to click on Add Account, Investment. From here for the investments, we can title this, but the first thing we want to do is making sure that we are selecting if it's a non-qualified or qualified annuity. this case, it's non-qualified. So let's just title this non-qualified annuity. We can change the owner, whether it's owned by the client, co-client, jointly owned, or in a trust. And we can also indicate a purchase year. So if we just wanted to assume it happened in the far in the past and notate that date, we can indicate that from here. So maybe this was purchased in 2015. We can also mark this as managed. So if this is product that you do manage, we can check that off from here. But when we are entering an annuity product as part of the current net worth, we will see the option to copy from a model. So we still can choose to enter all these parameters manually and proceed from here. But if we're looking to leverage the annuity models and copy from our existing products that we have indicated in our advisor portal, that's when you click on the copy from model button. It's going to open up this drawer in which we can select which annuity model we want to pull from. So if we wanted to pull from any of our 3 that we already have curated, we can select them from this list. And if you do have a multitude of different annuity models already created, you also can search them by name from here as well. But when we do select the annuity model, that is when we can also select which distribution model we want to use. Whether we want to pull in the information for none of them, just have it be blank and manually enter it from there, we can certainly do that by keeping this selected. Or we can select one of these options for what we are looking to model for this particular annuity product for the Holmes family. So let's say in this situation, this is just a single income at age 65 option that we already have curated. We can select these 2 options, hit save. And we're now going to see the parameters that I entered in the annuity model pre-filled here for us. So this is just a way to streamline our data entry, especially if this is a product that is very popular with clients. We can just have all that be pre-filled based off of that original entry, but you still can make modifications after applying the model. So if maybe this was actually a different annuity product, we can change the annuity type. We still can manipulate the crediting rate for the fixed annuity, for example, and the same thing for distributions. So if we click on the lifetime income button, it'll open the drawer in which we can see the parameters that we brought over from the annuity models distribution selection. So if there were anything that was different for this product, we still can make changes after the fact by just clicking into that drawer and then adjusting anything that might need to be adjusted. So maybe for this client, they had a very good deal. We've got a 2% increase right here, but they do have an applicable benefit base fee that we want to account for of 1.5%. We can indicate that in each of these fields. And then of course, we also want to enter what the total balance is for the product as well. And the benefit base. And also the cost basis as relevant. And then we can hit save, and we've now incorporated that as part of the current net worth. But that is how we can enter an annuity product as part of the current plan. When we are looking to propose an annuity purchase, let's just exclude this for now. That is when we can navigate to our retirement module and into analysis. And then here in the action items, this is where we can start to curate our proposed plan. Just for reference point, retirement analysis and the poverty success. This is going to be looking at the Monte Carlo simulations, and it's the 1,000 trials of market volatility. And it's the percentage of those trials that make it to the end of plan without running out of money. So right now for their current path, they have a 97% probability success. But as we know, there's a lot of different paths we can take. That is when the action items comes into play, when we can start to propose changes to their proposed plan. And anything that we're indicating here is going to be impacting just the proposed plan. It's not going to be impacting the current plan, which is only editable by the profile selections. So if we click on the edit button, this is where we can go to add or remove existing action items, but it's also where we can go to propose new paths entirely. So if there's a new path we're looking to evaluate, such as proposing an annuity purchase, that would be done by clicking on the Add New Items button. From here, we can add anything from new goals to new expenses, new insurance policy purchases, and also annuity purchases as well. So in this situation, we're going to be proposing that the client purchases one of the annuity models that we have created. So we're going to click on Add New Items, Annuity. From here, we can title this policy name. We can indicate the owner, whether it's owned by the client, co-client, or jointly owned. For the purchase year, we can indicate when this is going to be occurring, whether we want to show this happening immediately, have it happen in a calendar year, such as 2 years from now, or have it happen at a specific age for the clients or life event. We can just select that option from the dropdown. In this situation, we're going to be proposing that this happens immediately. And then for an annuity purchase, we would select which account we want to pull from to fund this annuity purchase. In this case, they're going to be pulling from the joint brokerage account. So we're going to select that option. Once we select the account that we're pulling from, once again, we can choose to enter these parameters manually if desired. Still can select what annuity type we want to use, change the distributions, enter that value and account value bonus if applicable. But we're going to be streamlining our workflows by copying from model. So once again, it's going to open up that drawer in which we can select which annuity model we want to pull from to pre-fill those parameters for us. Then we can choose which distribution model we want to pull from as well. Let's assume it's the joint income at age 67. Hit save. And we're going to see this information pre-filled for us based off that annuity model. So it's pre-filled to be a fixed annuity, has the crediting rate entered for us. Click on the lifetime income button. We're going to see that drawer is filled with the parameters that we already have entered back in the advisor portal under models. And we can continue to build from here if needed. So if we needed to customize this further, once again, maybe this particular client has a little bit more of a unique calculation. Maybe their annual increase is going to be a little bit more favorable for their situation. We can indicate that from here. Hit save. And that will save what we indicated for the lifetime income. And then especially because we're purchasing an annuity, we do want to indicate the value or how much we're going to be purchasing this annuity for from this account. So in this case, it's 300,000. And when we are purchasing an annuity, if the product has an account value bonus, we can enter that from here. This will be applied to be essentially increasing the value of the annuity without an additional cost or pulling from the asset. So if there's some sort of incentive when purchasing this product, right now, we can indicate that from here. And we also would indicate that benefit base that we're going to be calculating the income percentage off of. And then we can hit save to then incorporate this as part of our proposed plan. So once we hit refresh, we are now seeing the impacts to our proposed plan with our annuity purchase. So we've already brought the property success up a couple points, which is fantastic. But as we know, when we're looking at an annuity product, and especially for ones where we're probably using annuity models, they do have those guaranteed income riders. And a very important part of retirement planning is being able to have income that we can rely on, or that is considered stable income. So when we are looking to illustrate the impacts to stability income in retirement, we do have a visual dedicated to that, which can be found under the Retirement Details tab. So here under Retirement Details, this is going to be looking at the cash flow level information, which is looking at that straight line projection from the cash flows. And we're going to be greeted with the income sources of proposed plan graph. Here we're going to see an illustration of where our money is coming from in retirement. We can hover over each of these key pieces right here to really highlight that we heavily rely on Social Security for a good portion of time. We could also see pensions if applicable, and the annuity income coming in as well, and any other income, and also the savings withdrawals that are happening, especially a little bit later on in life, and any income shortage. If there was a shortage, we see how much dollar-wise we're short, but the key thing here for what we're discussing is the stability income percentage. So right now their income is 47.2% stable. This is going to be considering things like Social Security, pension, and annuity income, of course. But if you wanted to illustrate that impact, we can just quickly exclude the annuity proposal. We'll see how the income stability percentage drops. Now it's 38%. And when we re-include it, it's going to go back to that 47% roughly that we have for stability income. So this is going to be one of our first key visuals that we can highlight when looking at an annuity. Of course, there's multiple different products that can be modeled. We can also stack the annuity products So if we are having that situation where we're looking at the short-term products that have short-term or certain periods of income streams, we can stack those via the action items as well, because you see that was a question. But from this drop down, we also can view the withdrawal rate of the proposed plan as well. So if we're looking to highlight the percentage that we're pulling from our assets to fund our living expenses and things like that in retirement, we can see how that averages out each year. And we can also view retirement spending of their scenario as well. So it's gonna be that real eye-opener conversation of what is our true cost of retirement. But as you can see, there's a lot of costs. There's also a lot of assets that we're pulling from to really fund our livelihood in retirement. So this might be a situation in which we are gonna be perhaps pulling more from our brokerage account to have a little bit more of a better buffered annuity product. So maybe this is when we're looking at this and we're saying, actually, we're wanting to have a third illustration here to maybe illustrate a different type of annuity product that will provide a little bit more of a stream of income for us in retirement to better protect our assets and to better have a more stable income percentage, for example. So if we're looking to create that third scenario, we can do so by clicking on the probability tab. From here, we can click on the pencil icon located next to the current plan. This is going to open up a drawer in which we can add or remove plans. And from here, we can either choose to add a new plan, which is going to copy the current plan essentially and allow us to build off of that, or we can copy from one of our proposed plans and build from there. So let's say we want to copy off of that. We can just click the copy button. Let's retitle this Annuity Proposal 2.0. Hit the check mark to save the name change, of course. Once we hit OK, we now can then select that Annuity 2.0 proposal from this drop down. And now when we go to the action items, we're going to exclude this annuity proposal that we have curated, and we're going to propose a new annuity proposal. So we're going to click back on the edit button. From here, we're going to click on add new items, annuity. And this is going to be Annuity Proposal 2.0. Change the order to joint. We're pulling from the joint brokerage account once again, and let's copy from our model. So this is income at age 65, but maybe we want to have that better income stream at age 67. So let's select this option, hit save. Once again, we can put that value. In this situation, let's pull more. Let's do 400,000. And let's click into the lifetime income stream. So if we needed to make modifications, we still can from this particular selection, but not in this situation. So we're actually just going to hit save. And then we are going to save this as part of our proposed plan. So you can see that comparison side by side, Annuity 2.0, the difference here for the current plan versus Annuity 2.0, still a 98% product success, which is great. But going back into the retirement details, this is where we can see that income stability ratio. We can see there is a little bit of a slight difference here for this particular product that we have selected. We still can see what's happening with the withdrawal rates of the annuity product as well. Same thing with retirement spending and how it might be impacting any of the withdrawal rates or anything along those lines. But especially if we're looking to compare and contrast one scenario versus another, we also have our comparisons tab. So under comparisons, this is where we can compare side by side the difference of invested assets between the two plans that we have selected. We can see the difference of net worth. We can see the difference of taxes paid over time, assets at retirement, and things along those lines. So there's a lot of great information that can be found here. But when we're looking at trying to really see the breakdown of what's happening for the annuity product and the income stream, we also have other pieces of information that can cover that for reference as well. And this can be found by diving into the cash flows, which is where some of those charts we're pulling from. But in retirement cash flows, we're going to be greeted with our MAPS visual. And so the MAPS visual is going to be looking at and targeting a specific year of the cash flows and highlighting it into an easy to digest visual where we can see in the green where our money's coming from and where it's flowing to in terms of expenditure. So we can see we're paying a lot in expenses and taxes. We've got some college costs occurring for the family as well. We can use the slider to target a specific year. So if we're trying to target a specific year, such as their retirement year, we can toggle to that year of the plan. We can see that in the current plan, which is what we have selected currently, that we still have one of them working, but we do have a large gap here in terms of income. But if we wanted to toggle to a specific other scenario, we can just click on this drop down right here. That's when we might go to our Annuity 2.0 situation. And then we can look at what's happening with the cash flows in this particular plan as well. So if we just scroll a little bit further down, we're still going to see the salary because we still have one of them working. But now we're going to see the annuity product kicks in that year to assist in paying for our living expenses and paying for taxes, things like that. And we can see that by toggling down to specific other years of the cash flows as well. A large portion of our retirement income, when both are retired, is stemming from Social Security and the annuity product itself. We also can switch the aesthetic of what we're looking at for the maths by changing it to breakdown. This is the same information, it's just in a different formatting. So whatever might be resonating the most in terms of interpreting what a specific year of the cash flow is, we have both of these visuals as options, but we also have the summary. So the summary tab is where we're going to see a year-by-year breakdown of the cash inflows and the cash outflows of whichever plan we have selected from this drop-down. So right now we have our Annuity Proposal 2.0 selected, but we can also view our current plan or any of our proposed plans from here as well. And so let's say we are trying to view here when the income is kicking in, what's happening that particular year. We can scroll down to that year, of course, to see just high level what's happening in terms of inflows to outflows. But we can also click into the column header to drill down further into what is making up these figures. So especially if we're just trying to see how the product itself is either coming on, or in a second we're going to review how to see how it's performing. We can then click into the annuities income section to then see a breakdown of what's happening here. And when it's kicking on, what the income stream itself looks like over time. We can see that it's continuing throughout their lifetime, of course. But in the accounts tab, this is where we can see the ending balance by accounts for all the different accounts that they have, including the annuity products that we purchased in our Annuity Proposal 2.0. So here we are going to see that annuity product. We can see how it's growing over time. But then, of course, once we tap into it, we're starting to draw down on that balance. And we can see for the lifetime income annuity option that we had selected and indicated from our copy from model selection, we do have the annuity product itself running out of a balance in 2045, right when they turn 76, I should say. So even though we're running out of the balance, because it's lifetime income, we're still, of course, going to show that income stream happening for the annuity itself. So looking at age 76 and on, still have that income stream since that guaranteed income off the annuity product. So especially if we're trying to illustrate that even when the balance runs out, we still can see the income coming in. We can see the same thing for the annuitization too. That product balance would disappear. When we tap into the annuity income stream, we're still going to see the income, of course, happening regardless. And like I said, we can toggle to the current plan. So if we're just trying to show the difference of cash flows between our current path versus one of our proposed plans, we can toggle between the two. We can see that negative net flows are a lot higher if we don't have the annuity income. So these are going to be some just helpful visuals when looking at the annuity products.